If you have a valuable home and you're looking to maximize the cash out of it with a reverse mortgage, then you've got to at least consider a jumbo reverse mortgage. What I'm going to do in today's video is I'm going to show you exactly what a jumbo reverse mortgage is. We're going to compare, excuse me, and contrast the jumbo with the traditional HECM. We'll go into scenarios on who should get a jumbo and who shouldn't get a jumbo. And at the very end of this video, we'll actually go behind the scenes and I'm going to show you exactly at different age groups, at different ages and different home values, how much you can get out of your home with a jumbo reverse mortgage right now in 2024. So if you're up for that, this will be somewhat of a quick video, but I'm going to go in depth. I'm going to be thorough so you know everything about jumbo reverse mortgages and you can make a better decision on whether you should do it, whether you should do a regular HECM, or whether maybe you shouldn't get a reverse mortgage. But before we do that, just to introduce myself real quick, my name's Jason Eichmiller. I own Reverse Mortgage Reality in this channel. I've been helping seniors since 2008 learn about and get reverses. You can see my contact information is below, and I'll just do a quick slide or two. That's me and my family. That's Bridget, my wife. Alyssa, who is just about as tall as her, which is crazy because she's just 14. Jason, my 12-year-old, and Molly, my 10-year-old. This is my contact information again. Directly, you can get me at 888-309-9705. Email me at jason@keyhomelending.com, or you can go to the website www.reversequotes.com. Here it is up on the screen. Basically, if you want to pop, this thing moves so fast. If you want to pop your information in, let's see here, let's go back there. There we go. If you want to put your information in, we can schedule a time to talk. Also, if you scroll a little bit farther down the page, you'll see testimonials from senior citizens that I've helped. And then if we go real low, then we can, you can see actually more testimonials. That's from Henry, from Kevin, both of them were helped recently, then from Chuck, Dana, and Michael, other folks that I've helped with reverses. So back to me, before we go to that reverse mortgage calculator, that'll be a little bit later in the video. Let's go over what a reverse or what a jumbo reverse mortgage is. And a lot of what you're going to hear from me, if you're familiar with regular reverses, the jumbos are very, very similar to a traditional reverse mortgage or a HECM. And by the way, if you hear proprietary reverse mortgage out of me, a jumbo is the same thing as a proprietary reverse. So if you hear me say proprietary, just know that it's jumbo. I know a couple of the slides actually state proprietary reverse mortgage. So what is a reverse mortgage? Let's do that really quick. First of all, hate to disappoint you, but a reverse mortgage is really simple. It's just a mortgage, but it has slightly different characteristics. What we do with a reverse mortgage is we're going to give you part of your home's value, not the whole thing, but part of it in tax-free cash based on your age. So the younger you are, the less you get. The older you are, and it probably makes sense if you think about it, the older you are, the more you get out of your reverse mortgage. Obviously, as you know, and you could probably see the commercials when you have the washed up stars of yesteryear showing reverse mortgages on TV. Well, of course, yes, they're doing it to get a paycheck. But one thing that they say that's very true is that you don't have to make payments on a reverse mortgage if you don't want to, although certainly you can if you do want to make a payment here or there. Now, what you are responsible for, and it's because you still own the house, a reverse, again, it's just a mortgage. It's a mortgage on the deed or on your house. So you are responsible for paying your property taxes, your homeowner's insurance, and if you're in an HOA, of course, you've got to continue to pay your HOA dues. So again, we're giving you part of your home's value in tax-free cash. You don't have to make any monthly payments on it if you don't want to. You're responsible for the homeowner's charges because you still own the home. And if you want to get rid of it, say you win Powerball, just buy me a case of beer, please. That would be nice. You can sell the house. You can pay it off at any time. And if you live in your home for the rest of your life, then the house will go to the kids. So the kid or whoever you want it to go to. Maybe you don't have kids, you don't like kids. The house will go to if you pass away. Actually, let me back up. If it's you and your spouse on the reverse mortgage, which I always do, by the way, if there's a spouse, then if you pass or your spouse passes, nothing happens. Nobody has to move. Nobody has to settle up because both of you are on it. When both of you pass away, that's when the house goes to your kids and they'll get it and they'll decide if they want to either sell it because they live somewhere else and they like where they live, or if they want to refinance it, they can just refinance whatever. So if they want to keep the house, let's say for a rental, or if they want to move in. And of course, and you'll actually get a statement every single month from the reverse mortgage company and it'll say how much is owed. So when you pass away, whatever is owed gets paid back and your kids get the rest. It's pretty simple, right? It's very, very similar to a regular mortgage, except with this one, we're giving you some money and you don't have to make payments on it. Now, let's get on to a jumbo reverse mortgage and let's talk about what separates or what differentiates a jumbo reverse mortgage from a home equity conversion mortgage, which is a HECM, and that's the government reverse mortgage. So first things first, with a jumbo, sorry, I'm parched. With a jumbo reverse, you can be 55 to qualify, whereas with a HECM or a government reverse, you have to be 62 or older to qualify. Now, with a jumbo, and here's a big reason why just about everybody with a higher value home chooses the jumbo over a HECM. Well, the HECM, the home equity conversion mortgage, and I'm going to show you this in my charts a little bit later on. But in 2024, the HECM has a maximum home value of $1,149,825. So what does this mean in English? This means that if your house is worth 1.149 million or 5 million, you're getting the exact same amount out of your home with HECM. With a jumbo, though, there is no cap on your home value. So if you have a $5 million home, we're going off of your age and the $5 million. If you have a $10 million home, we're going off of your age and the $10 million. If you get my point. If you have $1 million home, we're going off of your age and the $1 million. So if your home is worth more than 1.15 million, then to maximize, to get everything you can possibly get out of your home in a reverse mortgage, you're going to do a jumbo reverse mortgage. Again, it's also called a proprietary reverse mortgage. Hope that makes sense. The next thing that differentiates a jumbo reverse mortgage from a HECM, home equity conversion mortgage, is we're going to look at how you can take your cash. So yes, the home equity conversion mortgage is more creative. So there's more things. They call the HECM the Swiss Army knife of retirement, just because you've got the monthly income option, you've got the credit line option that lasts forever. You can compare, or you can kind of combine them. You can do a lump sum with a line of credit, with monthly income, with the reverse paying your property taxes and homeowners insurance. So that's really creative. The jumbo is a little bit more constricted. So there's two main types of jumbos. One is a lump sum jumbo, where you're going to get all of your money out of the house right away at closing. The other is a line of credit jumbo, where you can take some cash and the rest goes in the line of credit. Let's break down those two real quick, and I'll again compare and contrast and give you advantages and disadvantages versus, well, we'll do the advantages and disadvantages a little bit later on, but we'll compare and we'll contrast the fixed lump sum reverse mortgage, jumbo reverse mortgage versus the HECM, and then we'll do the same thing with the line of credit. So for the jumbo, you already know that you're getting the entire loan amount. So if your house is worth $5 million, you're getting the loan amount off of $5 million, $10 million, it's off of $10 million. We don't have that 1.149 anymore. But here's another thing. The HECM if you're free and clear on your home, let's say you're free and clear on $1 million house. I'm just using it because it's easy numbers. And let's say that you have a loan size of $400,000. The HECM is going to only give you 60% of that $400,000 right away, and it's going to make you wait a year for the rest of it. So doing quick math, which you can probably do too, if your loan size is $400,000, with the HECM, you're only getting $240,000 up front. You've got to wait a year for that extra 160. But sometimes, what if you're looking to buy an investment property or fund your business, or you need home health care and you need a lot of it because the home health care is really expensive? Then you can turn to a jumbo reverse. And the jumbo, let's use the same example, $1 million value, $400,000 loan size. Well, the jumbo is going to give you all of that money. It's going to give you that entire $400,000 right away. So you're not going to have to wait a year for any extra money. They give you the money, you do what you need to do with it. So that's a big difference between the jumbo lump sum versus the HECM lump sum. Now, let's look at the line of credit. Now, I will say that the HECM line of credit, it's stronger than the jumbo line of credit. Remember, at the beginning of this video, I told you I'm going to give you the pros and the cons of both. And there is no perfect solution out there but Powerball, but it's kind of hard to get. So we do the best that we can with what we've got. So the HECM line of credit, it's going to last forever. So there's no limitations. You can take it, build up that line of credit forever. It also grows at whatever the interest rate is. So you get a big portion of growth. It lasts forever. And of course, the money that's in the line of credit, if you don't take it, then it's not being charged any interest. The jumbo line of credit is a little bit different. Again, the advantage is if you want a line of credit on a $5 million home, you're going to get a bigger line of credit from the jumbo than you would off of the HECM, because remember the HECM, even for the line of credit, we're still limited at a $1.149 million home value. The challenge with the jumbo line of credit, and you just have to be clear about it, is that the line of credit is only available for 10 years. Okay, so you only have access to the line of credit for 10 years. And then the companies that do the jumbo line of credit, for the most part, they don't give a lot of growth to that line of credit, and the growth only lasts for 7 years. So the growth is really minuscule. It's just 1 or 2% and only lasts 7 years versus and then for the last 3 years of the line of credit, you're not getting any growth, versus the HECM line of credit, where it grows forever and it's equal to the interest rate. So right now, the HECM line of credit growth is between in the 7s or 8s. So again, line of credit, if your house is worth a lot, $2 million, $5 million, $10 million, and you want a big old line of credit, then definitely consider the jumbo line of credit. But if your house is only worth like 1 million or 800 or 1.15 or so, then you're probably going to want to do a HECM line of credit. Okay, let's go into, you know what we'll do? We'll go into age groups, because I don't want to make this too long. Let's do some age groups, and let's look at who can get what from the HECM versus the jumbo. And you'll see what I mean when I show you that you have a maximum home value of 1.149 with the HECM, and kind of you'll see how it limits the cash. So let's see if I can share my screen again. All right, look at that. I did it pretty seamlessly. Look at me. All right, so for age 55, what I'm doing is I'm doing ages 55, 62, 72, 82, and 92. And we're going to do home values of 1 million, 2 million, 4 million, and 10 million. Now, you can see at age 55, there is no HECM available. And the reason why there's no HECM available is because you've got to be 62 to get a HECM. I think you know that. But if you didn't know it, now you know it. So looking at $1 million, $2 million, $4 million, and $10 million jumbos, you can see how the loan is about somewhere between about 31% of the house value, going from $1 million. You can actually, there's one investor that does it for homes under $1 million. So if your home's worth a little bit less, but you like the idea of the jumbo, or you need to get all your cash up front, then just let me know, and I can kind of take you to that investor. But you'll see that it's about 31% at age 55. Let's see what happens at age 62. All right, 62, you're looking at now the HECM is in play. You'll see that the proprietary at $1 million home value, the proprietary is giving more than the HECM. So you'll see in the economy, like back in 2021 and 2022, the HECM was actually giving more than the proprietary. So they got some go up, sometimes it goes up, sometimes it goes down. But this time, in this snapshot of May of 2024, the proprietary is giving more than the HECM. It's giving about 33, almost 33%, while the HECM is giving 29% at age 62. $2 million house. Now you see that, yes, the HECM is giving a little bit more, but the proprietary vastly outpaces it. And again, that's because the HECM, the maximum value is 1.149. So the proprietary is giving 660 at 2 million, 1.3 at 4, and at 10, about $3.3 million. Let's go to a 72-year-old. All right, the HECM is giving 35% at $1 million. The proprietary is giving 38% at age 72 and $1 million. Then look at the 2 million, same thing happens. The HECM is pretty much stuck at that 1.149. The proprietary takes you to 771 at 2 million, 1.547 at 4, and 3.898 at 10 million. All right. Now, let's see here. Let's break this up. We've got 82 and 92 to do, but let's look at the, remember I said proprietary. If I say proprietary, I just mean jumbo. It's just kind of caked into my head to call a jumbo a proprietary. So reasons, we touched on this earlier, but real quick, reasons to take a proprietary. You know what, let's do characteristics of the proprietary versus the HECM. Obviously proprietary, if you need the maximum cash from your home, you're going to do a proprietary. 55 and older, if you're under 62, you're going to do a proprietary. If your home is worth over 1.149, if it's close, then let's look at the reason why you need the reverse. And it might be that a HECM makes more sense. It might be that a proprietary makes more sense. If you need all the cash right away, remember the HECM caps your first year cash if you're free and clear, caps it at 60% of the loan size. The proprietary or jumbo doesn't do that. So if you need all the cash, you're going to get a jumbo. I'll do this low income but high credit score after we do these others. The HECM reason, why would we do a HECM? Credit line growth. Remember, the HECM credit line is far superior to the jumbo. It lasts forever and it grows at the interest rate instead of just 1 or 2%. If you want monthly income, or if you want any combination of credit line, monthly income, lump sum, really, again, I call it the Swiss Army knife of retirement because it really is. You can actually mold the HECM all around your situation. It's just a question of, does the HECM give you enough money if your home is a little bit more valuable? And finally, retirement safety net, right? A HECM, you can use the HECM line of credit. You can do the jumbo line of credit, but not to be morbid, remember that you only have 10 years on that proprietary jumbo line of credit. So if you're in bad shape and you think, unfortunately, might pass in the next 10 years, then that's when the proprietary jumbo line of credit works. And also, of course, again, if your house is worth, say, 3 million, 5 million, whatever it is, and you need a bigger line of credit, then we're going to look at the proprietary / jumbo. Let's go back to this last one, low income but high credit score. So people occasionally get turned down from HECMs because they don't have the income. Remember, you've got to keep paying your property taxes and your homeowner's insurance with a reverse mortgage. And we want to make sure, and it's smart, honestly, we want to make sure that this loan, your income plus this loan together, will mean that you have enough money to afford to live in your home for the rest of your life. Now, in some cases, you're right on the cusp, but you're not quite there, or you've got credit cards that you're going to pay off, and the HECM won't allow you to pay off credit cards. Hint, the jumbo, I should add this somewhere on a slide, the jumbo allows you to pay off credit cards, car loans directly, whereas the HECM does not. So let's say that you don't have enough income, but your credit score is pretty high. We can actually mitigate out your low income if your credit score is high using a jumbo / proprietary. pretty good at being creative with that, just using that program and being kind of working it around what you need it to, basically how you need it to be worked so that you can be approved for it. So if you've gotten turned down by a HECM or a proprietary / jumbo, and it's because of income, then give me a ring and I might be able to help. Again, you can see my contact information is flashing below. All right, let's look at some niches, right, for the proprietary. If you want to fund a business, you might need more than a few $100,000 that the HECM will give you up front. If you have expensive home renovations and repairs, if you really, really, really love your home, but you've got to do some stuff to it so it really becomes your forever home, then the proprietary is a great resource, great tool. On the other hand, if you're looking to sell your house and you can't qualify for a home equity line of credit, you've got to do some pretty extensive repairs, then look at the proprietary reverse mortgage as well. Home health care, yes, sometimes. You would need to justify a jumbo reverse mortgage for home health care, you'll need really, really expensive home care in the first year, and the HECM won't. Basically, you choose a jumbo if the HECM can't give you that whole first year. Or if you're, let's say you have a $5 million home, you're free and clear, you're in your early 60s and you need home care, then the jumbo is probably a better idea than the HECM. But again, that's a case-by-case thing. So definitely reach out to me and we can talk through the benefits and the drawbacks of each program and make sure that it's better for you. More proprietary niches. Eliminate high balance unsecured bills, right? If you have credit cards that are super high balance and the payments are high and you can't qualify for a HECM, then let's look at the jumbo because I could probably get you to qualify there. If you're looking to buy an investment property and you need more than a few $100,000, then the proprietary / jumbo is absolutely the right way to go. And finally, if you need more than $300,000 or $400,000 immediately, you've got, and it's a need, and it's an investment property, it's a business, it's the home repairs. You absolutely needed to do this, then the jumbo is the right way to go. But with all of these, you don't want to rely on blanket statements, even mine. So give me a ring, shoot me an email, and we can discuss the pros and the cons of both, and we can figure out what's the best for your situation. All right, let's go to age 82 on this calculator. So age 82, the HECM's giving about 45% of your home value. The proprietary is giving almost 50% of your home value. $2 million, same thing. You see it growing, 4 million and 10 million. Now, what I want you to do is I want you to take a look at the difference in the proprietary, again, / jumbo, on age 92 versus 82. And maybe there is no difference. So look at that. Age 92, the HECM is now giving 59, almost 60%, whereas the jumbo is only giving 52%. So remember, if we go to age 82, the HECM is giving 45%, and the jumbo is still outpacing it, giving about 48, 49%. The proprietary only jumps up 3% from 82 to 92, whereas the HECM jumps up drastically. It jumps up, geez, I mean, you see the difference right there. But look at home value for the proprietary. Let's do 4 million and 10 million. The 4 million is giving 2.109. The 10 million is giving 3.954 at age 92, and at age 82, you're looking at 1.966 and 3.944. So a very small difference as you get over 82. Basically, for high home values, $5 million or more, the jumbo is tapped out. Okay, so just know that when you get older, when you're getting to your mid 80s or so, then the HECM becomes more powerful, and the jumbo kind of loses a little bit of its chutzpah, if you will. So that's that. 24 minutes, went a little bit longer than expected, but again, I wanted to make sure that I was thorough and you were given all of the information for this. So now that you can take a look and say, okay, this is my home value, this is my need, So really, that's what we're going off of. We're going off your home value. And what do you need a reverse mortgage for? Do you have a relative who needs home care, or do you? Are you looking to pay off some bills? Do you just need to get rid of your mortgage payment? Are you looking to invest in a business or pay for your grandkids' college? All of these scenarios are different, and I would just say that it would be really intelligent for you to have a discussion and ask as many questions as you can possibly ask. And if you call me, then I'll basically give you the information. I'm not a mind reader or anything, but I have a good idea of what your questions will be based on your scenario. So feel free to give me a shout. Again, my name is Jason Eichmiller. I'll do my very, very best to help you. My contact information is below. If you want to chat, you can always call me at 888-309-9705. I really appreciate you. And again, my goal is just to make sure that you're getting a reverse mortgage to absolutely empower your retirement, and you're doing it the best way that you can. You're getting the smartest reverse mortgage that you can possibly get. All right, that's it from me. Thank you so much. I really appreciate you. And anything you need, feel free to give me a shout. Till next time, take care of yourself.